All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital coming at you a few minutes after 11 a.m. Central Standard Time here on Friday, the 5th of March, 2021. Here in beautiful Boerne, Texas, we are just north of San Antonio, just outside of San Antonio. And I'll tell you what, man, the view out here, it sure as heck does a lot more for you than the city view there, at least for me. So hopefully y'all are doing well. Good to have you checking in. Who's here already? LXT, Hank, what's going on? Nathan's here. Man, I am so going to screw up your name, but I'm going to try here. Man, no, I'm not. Guys, I'm so sorry. Is it Vreedhe? Oh, man, I hope I didn't screw it up too bad, but glad to have you checking in. Ari's here. Remind me a little bit later in the show here, probably after about an hour or so, and I'll see if I can pull up that Indian Bank Index there, Bank Nifty, and I'll take a look at it. Sure. Hey there, Spiral Architect. Good to see you. Kevin, checking in. Is that SA? Is that San Antonio? I'm from San Angelo, so that's another SA. Good to have you checking in, man. You know all about Boerne then if you're over there in San Antonio. Let me see here. What's going on, Data? Niels is here, checking in from Belgium. Good morning. Good to see you. LXT, man, yeah, it's a lot better here, man. The view is pretty amazing. I'll share some more pictures with you guys over there in Discord today. That's a pretty great area here. Hey there, TV Canal. He says, bullish divergence, the weekly RSI on the DXY. Bull run can start. Only Bitcoin is still not down. I don't know. Bitcoin's down. You know, you guys, you have to think. Bitcoin is in right now, a bearish market structure coming off the all-time highs there. We've got lower highs and lower lows. So, yeah, we'll see how that looks there. But, man, I'll tell you what, I've kind of, I was a bit more bullish on the DXY, about a month ago or so, a month and a half ago? Yeah, about that. And then we had some weakness looking in there and not some overly, it wasn't overly impulsive on the move up. So we started, maybe leaning toward further downside, maybe one more lower low. And we're going to talk about the DXY today because, man, it's had some movement this week. Right now with the move it had yesterday over a level we'll talk about, it's really kind of put turned the tables in favor of a more bullish count, which would mean that the bottom was back in January. You can see all the upheaval this is all, having on the rest of the markets. Everybody acting surprised that the markets are dropping this week, but nothing different than what we've been talking about. We'll take a look at all that and see how it all comes together and see if we can figure out maybe if this is it or, if we've still got to wait a little bit. We'll take a look at all that. Well, Kevin, man, it's great having you checking in, buddy, over here in San Antonio area, man. It's a great city, guys. I keep telling you, if you haven't visited, you need to make a chance to visit San Antonio and then kind of come up north a little bit, check out Boerne, jump up a little bit further north to Kerrville, Fredericksburg. Great little area. Hey there, Nevlusian. Brian, good to see you guys. Budman's checking in. Man, I pronounced it correctly? Vreedhe? Oh, man, that's awesome, man. I'm so glad. Thank you. Glad to have you checking in. Jason says, people who bought the Bitcoin bottom on March 13th, 20th are going to be taking profits next week for tax reasons. I guess if you mean that they're going to take it so that they can pay their taxes, because their taxes were already, what they owe in taxes is already known by the end of last year. So if they're going to sell to pay those taxes, yeah, I could potentially see that. Sure. I could definitely see that. I'm not sure how big a deal that would make. But why 313 though? Why 313? I mean, I said sure, but I'm thinking May or April. Taxes are April. So I don't know. Maybe you've got something there you're thinking that I'm not at the moment. Let us know. Hey there, Dominicus. Good to see you. Kevin's here again, talking about especially if you love Tex-Mex here for San Antonio. That's right. Gerben checking in from Netherlands. What's going on, man? Hey, listen, if you're new or if you haven't taken the plunge yet, man, we'd love to have you join us here at Texas West Capital. You can do so through howtotradetowin.com. Tier 3, I'm going to tell you guys, is the place to be if you want everything of everything. That gives you all the education, well over now 60 hours. It's not even 30. It's well over 60. Multi-market trade setups, exclusively for our Tier 3 members there. Our hot takes, our chart requests and all that. By the way, man, I'm going to make sure I'm caught up with them chart requests this weekend, you guys. Stop adding more. I'm so close to getting caught up finally after, we were out with the power outage there for a while. Finally almost caught up there. Lots of trading opportunities out there, though, guys. You've seen that. And then, of course, we have all our daily and intraday updates. And we do our crypto indexes twice a week now. We've got 5 of them that we track, guys, kind of to hopefully help you figure out where maybe what index, what kind of, should your money be in DeFi or should it be in exchange coins or whatnot. So we've got all that. As well as our weekly stream, guys, our weekly Tier 3 stream that we do just for our Tier 3 members. So anyway, come on in here. We'd love to have you there, guys. It's a great time. Our members are amazing. Amazing. Hey there, Hop. You say it's Bobby. Okay, does Scott Milker still work for you? Yeah, he still works with us. Yeah. He still shows up over there and helps run the admin stuff a bit when he's got some time. So, you'll see him in there chatting along as he gets that chance, of course. He stays pretty doggone busy with everything he's running over there as well with, with his own thing. But yeah, he still shows up there, sure. Let me see here. Let me see. Atmo, you're talking about, I guess, the tax purposes. He says he means capital gains tax from the bottom of the crash. Huh. Well, I mean, you're talking about anybody that might have bought down there. I'm not sure that we really had a lot of, it didn't seem like we had a lot of retail buying until maybe, not even really at 10 though. I mean, retail really started coming in after the all-time high. So if that's the reasoning, I'm not sure that that's going to hold up really well as far as, people cashing out on the 13th or something like that. So, yeah. Hey, I appreciate it there, Hop, Bobby. Good. I appreciate that, man. Yeah, it's all about family, guys. And the one thing that I always talk about, with our members as well as with you guys is, trading should be something that it shouldn't consume you. If you're sitting in front of your charts all day, every day, and then when you're away from them, you're holding up your phone looking at it, and you can't ever really be in the moment with anybody, you need to stop. Just for a little bit. Take a step back. I'm a firm believer that trading should give you 2 things. It should give you freedom and it should give you money. And so if it's not doing both of those things, then you need to work on the way in which you're doing it. You're not going to make a whole bunch extra more money. There's a diminishing return, I guess you should say, when you're trading, okay? So you can trade, guys, listen to this. Believe it or not, you can trade just a couple hours a day and be much further ahead than if you were spending all day long trading, okay? So there's a diminishing return. The more you sit at the computer does not mean you're going to make more money. Matter of fact, the longer you stay at the computer, you might be able to make marginally more, but it's not worth all that extra time and all that extra stress that you have sitting in front of the computer or in front of your phone all day trading on that. So I think that's something that you guys should really, really think about because it's not, man. I mean, if you've got a family, if you've got kids, if you've got pets, let them know you still love them. Hang out with them. But hanging out with them, guys, that doesn't mean, again, looking at your phone, watching your phone all the time while they're in the same room. You're still detached. You're not in the moment. And especially if you have kids, man, or a spouse, a significant other, that's really important to do, all right? Because otherwise, all you're going to have is your charts because they're going to leave you, except for your kids. But your kids are going to, grow up to be very unhappy and, whatnot. And we don't want that. So, yeah. Let me see here. Okay, so let's go ahead and check here, guys. So we're going to start here at the weekly. The biggest bullish thing I have, on the daily, the biggest bullish thing I have, again, as I've talked about previously, is this bounce here off this pivot, off the daily pivot. So that's a good thing. But last week, I was talking about this right here. Or not last week, earlier this week. Remember, I was talking about this candle right here, this opposite candle. So you've got this large candle going up, and then you have this small candle pulling back, and then you have this large candle going back up here. So this is significant right here. This is significant. And if you're coming up from the bottom, you should expect this to provide resistance. And sure enough, you can see right here, that's where it was. That's all it did. and then send us back down. Now, on the way back down here, we've got this, this little short rally here, and then we've got this bearish engulfing candle. And right now we're getting an advance up off the bottoms, but it's potentially just a wave one down, heading up, okay? Wave one down of this move down, the first wave. So this would be a wave two coming up. Watch this daily candle. If this daily candle closes down toward the lows here, that's significant, okay? Because first of all, this bearish engulfing candle, a lot of people, especially new to trading or those who have never really learned, they will say, oh, look, it's a reversal candle. Well, it's potentially a reversal candle. What it really is a pause, all right? So if you get a bearish engulfing candle like this, it's just a pause. Now, if you can get follow through to the downside afterward, in other words, the next day, another following supply candle here, then that gives us follow through, and that makes this much more likely to be a reversal candle. But, by itself, it's just a pause. So it could just be a pullback and then head up further. So we want to see how this plays out today. Now, you can see the volume's creeping up pretty good. We're getting close to the volume we had yesterday. So we definitely want to see how this, do we end up closer down to the bottom of the, the lows of the day? If we do on expanding volume, again, that kind of, if you're, that kind of increases the odds. We'll zoom into the lower time frame, and I'll show you how we've had expansion of volume as we've been going down, which is not what you want to see. You want to see volume tapering off if you're bullish as price continues to head down. Instead, what you have is more and more supply being thrown on the market as price falls further. So that's not what you really want to see there. But again, right now from a daily perspective, a daily time frame, we did get this great bounce off this pivot here, and that's good. But if we're coming back down below that, that's that's potentially setting up a move down here toward this, just big picture idea here, toward this 32,000, 200 kind of area at the S1 pivot. But it has to get below the daily pivot and below the swing low right here, this $43,020. Let me see here. If we zoom in a bit, again, just generally looking at price action. So when you have these larger candles in general, that's usually indicative of the trend. These short candles, a lot of overlap, a lot of wicks, a lot of dojis, are usually indicative of a correction, of a corrective move. So, again, you've got these larger candles going up here, and then you've got these smaller candles kind of overlapping a lot here on the pullback. And then you've got these you've got these larger candles going here. And then you've got, coming down here, larger candles. I mean, there's still some, dojis in there, some wicks, but overall, larger candles. And then here you've got, again, these very small candles. When I say larger candles, what I mean is the larger candle spreads, the bodies of the candles. And what we have coming off the lows here are just these very small little candle spreads, a lot of wick, dojis, hammers, stuff like that. So this is suggesting this is probably corrective here. Now, the one thing I said to watch earlier this week was this right here. I said it's possible this could be a 1-2 and then a 1-2 developing, but if it drops below this swing low here, then this is just 3 waves up, and that's corrective. And so if this is 3 waves up, now you're looking for 5 waves down below this swing low over here, below this 43,020 area at least. So that's what I'm looking for. I think, we're going to get it. I believe we're going to get at least below that. Now, in terms of this, that means this is an A, this is a B, and this is a C in progress here, at least. It's still possible that this could actually be a much greater defined top up here that nobody wants to believe, and I'm not saying it is the moment, but, it's definitely quite possible. And this then becomes a leading diagonal as a 1, and this is a 2. And you've got 3, 4, 5 still building for just an A, for just A. So you guys want to pay attention to that. There's no guarantees yet that this is or is not the top up here. Absolutely nothing has happened. Completely opposite of what most of crypto Twitter, the big accounts on there want you to believe. The reality is there's nothing going on here that says this is not the top. There's nothing going on here that says this is the top. So we have to see how does this continue to develop here. Now, again, you'll notice that this decline here, as I pointed out previously, hit this here. It's the same idea as that other daily candle we were looking at. You've got a large move up, big candle spread, small pullback, big candle spread afterward. this is what's to watch. Now, instead of the daily where we were coming up from under it, you're coming down on it. This is the support. It provides demand, right? And so that's why you got that bounce right here. But if we're coming back through that, it shouldn't hold up again. And that just kind of, increases what we were thinking about here as far as this coming down below that and continuing down a bit. So, again, that's what we're kind of watching. And right now, you can see that price is bouncing up here, getting rejected the pivot. If we zoom in here to the 1 hour, let me see. I think I've got a count on there. Yeah, okay. So there's two different counts I'm looking at. Now, the first thing I want you to pay attention to is the fact that, as I was speaking about earlier, this decline all the way down here. Look at how the volume is expanded. All the way as it's continued to go down here. And so, that's a big thing to kind of note there. And you can note that right up till the very last candle here, you have these large candle spreads and prices, finishing off at the lows of these big candles here. So that tells you that supply is kind of in control on this way down here, especially with this expansion of volume. Now, what I'm looking for here is we've either got this black count or this red count. Now, the black count suggests that this is a 1, 2, and then 1, 2, 3, 4, 5 gives you a 3. We're on a 4 here, just above the 38.2, almost to the 50, right in there between that. So it's a good wave 4, as an A, B, and a C. And so then what we should expect is for it to fall further. And so if it drops here below this swing low here, this would be your wave B at 46,444. That should kind of tell you, okay, this is likely done, and we're heading down for 5. Now, 5 has a minimum target here of 45,371.50 cents. And that's the 61.8 extension of wave 3 here, which is what we generally look for as an initial target for wave 5. Now, it can go further. It can overextend if it won't, if it desires, if it heads that way, but that's minimum what we're generally looking for. If that happens, then that would be a 1 and we'd have a 2, and that 2 would potentially get up here toward around 49,900 or so. That'll get you that 61.8 retracement. But it could, it could stop sooner than that, but again, generally we look for that 61.8 extension. And then we'll head further down, okay? Now, again, the other thought is that this is a 1 here, so the count's a little bit different in here, but basically get you a 1 coming down, and this is a 2. Now, if that's the case, it's going to be a short 2. As we go here, it gets you right here above the 31.8, not quite to the 50. But if the market is really selling compared to buying here, you might see that short 2. We've seen that before, usually on the way up, right? And so if this is a 1 and a 2, then our minimum wave 3 is going to be down here at this red line here, 38,725 or so. That's going to be the 1.618 extension of what would be wave 1 here, which is what we usually look for a wave 3. Okay, so that's kind of what we're looking for here. Do we, once we get, do we get rejected here where we're at and then drop below this swing low? And then that says, okay, our initial target is this 45,371, but if it continues on down through that, then we start looking down here at potentially the red count being the correct one there. So that's pretty much what we're looking at the moment. The only thing that changes this is if price advances above this swing high up here, this 52,600. So prior to that, I'm probably looking at, I don't want to go down too low on that. I'm probably looking at this swing high right here at 51,820 and 40 cents. If we're getting above that, then this potentially becomes then maybe a triangle. That's something I tossed out over the last week or so. So you get, instead of 5 down, maybe you get this ABC here and then ABC here. And then, this would have to be an ABC. So A, B, C, you'll get a D up here and then an E. And then it'll go above this area. I'm not a big, I don't think this is going to be a triangle here. I can't say it's not going to, but I don't think it is. I'm still thinking we've got further down there. But just in case, you got to keep that in mind as a possibility of what may be going on there. Now, we can look here at the 1 hour, and you can see that, we topped out and overbought here on Stochastic RSI. We're dropping down, attempting to drop down out of overbought. So that should kind of drag price down with it. Again, we just need to get below this swing low here, at 46,444 to really kind of say, okay, I guess we're probably heading a bit further down now. Let me see here. Excuse me. What's going on, Esteban? Good to see you checking in, man. What's going on, Snacks? What am I expecting for alts during these moves? If it's just correct, if this is just corrective, if it's just this wave 4 that we're kind of looking at right now as a pullback here, A, B, and then a C kind of coming here, then on the pullback, the alts overall should be okay. Maybe rally a bit. If this is actually a 1, 2, and then a 3, we're going to know that because the third wave, remember, your third wave is your largest, your strongest wave. That's where your volume really comes in. And if we see that as it does this, I think that'll spook alts, and alts will probably, bite the dust with it and not do too well. So it all kind of depends on whether this is, right now as we're looking at it as maybe an ABC as a wave 4, and then we've got wave 5 still to go maybe of 3 or of 5 or however you want to look at it there. But I think, again, if this becomes a bigger move down, if this really kind of, if we go here and we go, if this is 1 and this is 2, we should be looking then, if this is a 1, 2, and we got a 3, that 3 should be down here around, 27,900 or so. That gives us a wave 5 minimum down here around 22,100. And that's 5 waves down, which means you necessarily will only get 3 waves up and then 5 more waves down. And I think that kind of kicks the alts in the, between the legs there, and won't do too well for them. But as long as this is only an A, B, and a C, and you're getting around this 37,400 maybe. See, right here, if this is an A and this is a B and this is a C, then wave C will equal wave A right here at around 37,368. That'd be a pretty good target, 38,000 area. And then we could see that rally up there. But again, if that's the feeling that the markets are getting, should be all right. We look at those Snacks. Make sure you're looking at those crypto indexes that we watch as well. For the most part, they seem like they've got one more move up, which would suggest that this will pull back and they'll still head up a bit. I think DeFi is the only one that's maybe a little questionable at the moment. DeFi seems to be, it was the bigger one of them really, end of last year. And it might be a little bit further ahead than the other indexes. But the other ones, they're looking like, again, like they've probably got another leg up. We still need some confirmation, as I wrote with the updates yesterday. But I think they've probably got a pretty good chance of heading up higher. And that should take those with them. Let me see here. Let's see here. Michael says literally every TA guy on YouTube is calling for 38 to 42 area. Makes me think it ain't going to happen. Well, because it's 38 to 42 big picture here. Let me show you something. I don't know if you've been watching, but big picture here is we've got this range down here. And I've got all this stuff from that tier 3 thing we did. But right here, this range, all you're looking at is a return to this range resistance. That's why they're looking at that. Because if you take everything else off, you're looking to bounce right here. That's why everybody's looking at that. Again, the count itself, if it extends as it should get you below that, toward mid or low 30s. But this is something I've been talking about since we had this top up here. And especially since we, started getting toward this low round here. Remember, we were talking about that mid 30s probably. We were going to look at the upper 30s, as just as initial target because again, that's that range resistance. You want to test it as support and head up, but if it falls through that, it makes a lot of sense to kind of hit that big, all this activity area in here where you've got this high volume node at this 32 to 35, 32 to 34 kind of area there with that. Michael says, it totally makes sense, but usually if everyone thinks it, then it doesn't happen. I know that's what a lot of new traders want to say, because that's the kind of thing that gets perpetuated, and repeated ad nauseum in crypto Twitter. But I don't know how best to explain that that doesn't usually hold up so much, that kind of thought process. But we'll see. We'll see. Right now, with where we're at, again, it's going to kind of depend on what happens today. But if we look at where we're at here, again, looking at it this way, if we look at it, the fact that we've got what appears to be, again, 1, 2, 3, 4, 5. So 1, 2, and then 1, 2, 3, 4, 1, 2, 3, 4, 5. Gives we've got 3 up, and we drop below that swing low. That closes off this wave here, this wave from any further subdividing. It can't. This locks in this ABC here, dropping below it. The only thing you could maybe get is this being a leading diagonal, ABC, or 1, 2, 3, 4. But no, you can't even look at that because 4 shouldn't drop back below 2. See, so you can't even look at this as a leading diagonal. Maybe you can look at this as a 1 and then ABC. If we have to grab here, maybe ABC, and then we got 5 more down, so it becomes an expanded flat. I can give you that. I can give you that as a possibility. But at this point, we're already well up here into overbought for, the 1 hour right here. Now, your 4 hours reset down here, but again, we're just sitting right here at the previous resistance as support on RSI. Just about neutral there at 45. Your 4-hour candles aren't looking overly sexy at all. Again, they're just a bunch of wicks, a bunch of dojis and whatnot coming in there. So right now, they don't scream that it's going higher. From a pivot standpoint, again, you have to look at the fact that you've dropped below the pivot now. And you made an attempt up and got rejected and pushed back down. So, again, the odds are more likely that we've got some further downside. If we look at that. Don't forget on the daily here, we had this right here, this bearish divergence that we've confirmed here. So we should expect price generally to kind of come down as well. And with the push up here with Stochastic RSI recently with this advance, it's gotten us back up there. It gives it room. It's now crossing bearishly here. Gives it room to drop back down as price comes down with it. So, there are some thoughts on that as far as how we could do it. Like I said, I think the only way you can do it is maybe if you've got this as an expanded flat here. Again, a 1, and then A, B, and then, whether it's done here with the red count, 1, 5 waves down, or it's done over here with the black count, 5 waves down. In terms of that, how far would that pullback be? You got a 50% pullback on that right there, potentially around a 65 to 70.5 with the further pullback. So that would be a solid, wave 2, kind of target there. But again, what we generally look for when we have this, we default to the idea that this is a 3 up. So price would have to prove itself, and that's what I already talked about it getting above this up here. Above this 51,000. I guess it's 51,820 and 40 cents here. Getting above that would kind of suggest, okay, maybe that expanded flat is what's up. And in that case, you're looking at a minimum of 60 to 63,000 as an initial target for that. Let me see here. Let me see here. Curious anyone's take on here on best options to get Bitcoin exposure in a 401k besides MicroStrategy or GBTC. Let's see here. Corey says the premium on GBTC has been heading south, as I think big money that couldn't buy Bitcoin itself and wanted exposure have now found further avenues besides GBTC. Option short of quitting my job and cashing out the 401k and buying Bitcoin myself. I would make sure that I think you got to look at some things. Again, make sure you understand who you are as a trader or investor. Because, again, there is no guarantee right now that the top is in or that it is not in. We're kind of just doing this sideways thing now. We don't have any confirmation yet that price is either bottomed or it's topped. And so, buying in right now could be, if you don't have a really long time frame, say 5 years or something or more, buying in now could cause you a lot of stress if price has topped out and it comes back down first. So make sure you understand that. I know, I talk this often with new traders because, they want to just jump in because everybody tells me, buy the dip, buy the dip, buy the dip. Well, buying the dip only works when it's a dip, and we don't know for sure if it's just a dip yet. I'm kind of thinking it may be, again, but I'm still looking at some further downside, into the 30s there before we do bottom out on that. That last part is the joke. Is Bitcoin maxi say to quit and put the money in? Yeah, I mean, I guess you could buy Tesla. Tesla and MicroStrategy both taking a huge hit after they bought their Bitcoin. I think MicroStrategy, I was saying the other day, is down around 50%. Tesla isn't doing a whole lot better since it announced that it bought 1.5 billion. Again, guys, I want to warn you, what you continue to hear is that, about everybody that's buying here, but the reality of it is we're still getting these lows and these lower highs. We don't have, we're still below that high up there, and we're getting up here and we're getting, rejected right in this same where you would expect to get rejected at and popping lower. And that's in spite of, over $1 billion of being bought there. So somebody significant is selling into this. This isn't retail volume that's selling into this like that. So there's always the other side to the trade, guys. Remember, I've talked about, as traders, we often have to look at, the professionals versus retail. But even within the professionals, guys, they're not going to all see the same thing at the same time. See it the same way at the same time. So even among the other time frame traders, these larger, traders like that with the bigger time frames and the bigger money and whatnot, you're still going to have some of them selling into or buying into what the other ones are selling or buying there as well. Just like with retail, not all retail, is emotionally bullish and think it has to go up forever. They all don't see the tops at the same times or the bottoms. And so, it's the same thing with the big players. But I think that tends to get lost in crypto Twitter. Everybody continues to just talk about, they bought this, they bought that. Well, who the heck's allowing them to buy like they are? Who's fueling that buy? What shorts are they filling by doing so? Yeah. So, you want to be careful with all that. It depends on where you're located as far as how you can get exposure to it. I think Canada just okayed a Bitcoin ETF over there, I think, or something like that. I think there's an ETN over in Germany. So I don't know where you're at. Here in the U.S., trying to think where else you could really kind of get the exposure you're looking for. I don't think there's a whole lot of options at the moment, really. Now, they're going to increase. Even if Bitcoin were to pull back, even if this was some kind of larger top guys and Bitcoin pulled back for another year or something, my thoughts are it would still go higher. And so what that means is you're going to have people creating products during that time that, that'll expand on what we already have. The same as what they did during 2018 and 19, as the market was pulling back and then kind of going sideways there. That's when everybody's building is during the pullbacks. There's no time to really push stuff out and get ahead there when price is really rising. It's when it does its pullback that everybody starts putting that money into it. and whatnot. So, let me see here. Any thoughts on inflation and bonds and rotation out of growth stocks? The cubes has been beaten hard over the last few days. Could the bottom be in? Oh God, no. Sorry, that's my bit of bias based on my count. I think it's just the start. I think we've probably topped out in the stock market, guys. If we look at what's been going on, the stock markets, if the dollar continues rising, the stock market's not going to rise with it, as overall. Because what this will mean if the dollar continues to rise means is it's reversed. The dollar's getting stronger, and equities don't like that. As far as the bonds go, that's this whole thing. I think it's just the whole thing with the Fed. They're like, oh, there's no inflation really to worry about, and this and that, because by their measure, it's not. But there is asset inflation, other things that they've caused by QE. And so I think that becomes their issue with rates, with interest rates. And I think, they could sit there and pretend these other asset inflation, all these other things aren't happening, but it won't change what's going on with real rates. Real rates are rising. Same thing we talked about for a few months now. So, okay, you know what? I'm sorry, I got to get rid of this one person here. Put him in timeout. Sorry for that, guys. You know what? Oh, that's just ridiculous. I don't know why people got to come and act like idiots. Sorry about that, guys. But anyway, yeah, so when it comes to bonds and everything, what's going on with all that, I mean, it's just, it's just the nature of what it is. The Fed thinks that it has control over inflation, all these other things, and I don't think it does. This is something I've talked about, I've argued against for a very long time. They have the appearance of having control over it, but they really don't. When things get to a certain level, people are just going to be like, you know what? No, I'm done. I can't do this anymore. You want me to continue buying. You want me to continue taking out new loans and expanding my credit. I know I'm done. It's too far already. I'm not comfortable. What if, things continue to drop off? I don't want to get caught like that. And, at the end of the day, that's the only way it really happens. Everybody's all excited about this stimulus. I see this nonsense all over crypto Twitter. Oh, man, everybody's going to put their money into Bitcoin. No, they're not. Most people are not. If we go by what's been happening over the last year, most of the people are either going to pay down their debt with that stimulus check or they're going to stick it in the bank, which are the two deflationary things, not inflationary. But, this is the reality of what's going on there, guys. But I think sometimes people get too caught up, especially, retail traders get too caught up in the excitement of being on crypto Twitter all day long and listening to all the bullishness out there. And they don't really think beyond that. It's hard to. It's you kind of listen to it and you hear it all the time, and it just becomes second nature as truth, right? So I'm not, I'm never trying to put anybody down when I'm saying things like this, but I'm trying to be more direct about the realities of what's going on. So that way you guys can learn to, understand this and to acknowledge what's going on so you don't get caught. Corey, you're welcome, man. Sure thing. Ari says, does a rising dollar affect other asset classes the same as it does in equities? It does. Anything denominated in dollars. If the value of the dollar is rising, which if we jump on over here to the DXY here, is this right here? If the value of the dollar is rising, then yes, anything denominated in dollars necessarily loses value because your dollar is worth more. So it takes less dollars to purchase that thing. So the value of that thing, again, is less. That's the whole idea of deflation. And that's why, why it becomes so bad. Because the only thing that's really affected, the reason why deflation is so bad is because we are a credit-based society, right? A credit-based economy. And so in order for us to continue to expand, credit has to expand. We're a debt-based economy, right? So debt-based means expansionary credit policy. So as long as credit continues to expand, then a debt-based economy can continue to grow. But when that credit starts contracting, and we're seeing it in a lot of ways, less loans being taken out, more loans being paid off, money going into savings. These are all deflationary. And so what that does then is it means that the dollar, is going up there, right? So anybody that holds U.S. debt, that owes U.S. debt, they have to pay it in U.S. dollars. So the value of the dollar is rising. So now their debt, they have to go and buy dollars, but they have to buy more expensive dollars. So their debt is becoming more expensive. The only way that a debt-based society that, expansionary credit policy really works is if your dollars are cheaper tomorrow than they are today, because you're paying off your debt with cheaper dollars. So deflation becomes a real issue because the value of your dollars are growing. And so that means when you have to go buy new dollars now to pay off your debt, your U.S. debt, it becomes much more expensive to do so. And this is a very, very dangerous thing, especially when you think in terms of small countries, that are likely to have to be bailed out by the IMF, or just completely, they're just going to default on their loan payments and whatnot to the U.S., which then, again, works in that whole debt deflation spiral. And so, and that will continue down until everything hits a middle point, a midpoint, where it averages out, as it comes down. And there's nothing I don't believe there's anything the Fed can do to stop that. It's what will happen. The Fed will try, but the policies they're going to implement will likely make it last longer than what it should. Let me see here. So yeah, a rising dollar will affect, anything denominated in dollars with it. So if the dollar rises, equities, gold, silver, precious metals, Bitcoin, should all decline. Now, the only way, you could have something still rise, but in order for it to do so, it has to have so much demand that the demand outstrips that price. So everything else held equal, if the dollar's rising, then Bitcoin denominated in dollars should drop in value, right? But if you have enough demand coming in there to overcome that drop, well, that can still push price up. But that isn't just a simple little bit of demand coming up. That's a significant amount more of demand that has to come in, because they have to overcome that dollar thing that's going on. And then they have to, not only do they have to overcome that, but then they have to push even higher, so that way price rises. So it could happen. Because Bitcoin is pretty illiquid, and it's still pretty small, and there's some large players that can pop dump a bunch in there at one point. But at the end of the day, these people that are these large players that are involved in Bitcoin is only a part of their overall portfolio. And it's usually a small part. And so what happens when things become risk off? When the dollar rises, markets are dropping, it's risk off. So Bitcoin is one of the most riskiest assets out there. And so what usually happens is, if you've got this portfolio with all these different assets, you take your money out of the most risky. When it's risk off, you generally take it out of all your risk assets, but you're definitely taking it out of your most risky assets. Because why would you leave it in there? It doesn't make a whole lot of sense, right? Because there's no guarantee it's going to go up. And so we're talking about tens of millions, hundreds of millions, or more, billions of dollars. It makes no sense to allow that to drop in half, even if you think it might still go up later. No, you're going to get out, and if you still believe in it, then at the bottom you'll buy some more, to ride it up there. So yeah. Hey there, Kerouac. Good to have you here, buddy. Let me see here. Chitlins? Man, Chitlins Laundry. Oh, man, love it. I'm glad to have you here. Thank you. Hey there, Mike W. Good to see you, man. Let me see here. Hop wants to know, do you think if growth stocks go down, Bitcoin goes with it? It has been following cues so closely for a while now. Yeah, again, I don't think it's necessarily, this is the same thing I've been saying since, I guess for over a year now, when everybody was talking about how, Bitcoin was correlated with the stock market and whatever. Everything is correlated with what's going on with the dollar. because everything's denominated in dollars. So, it's not that Bitcoin goes down because stocks go down or equities or whatever. It's Bitcoin and equities go down because the dollar is rising. So yeah, that's kind of where we get with that. The dollar is the big thing. I've been talking about this for a very long time now. And yeah, I was a little bit early on thinking that there might be a top kind of coming in, and that's fine. It's the way it is, because calling tops is really a ridiculous thing. Tops and bottoms, to call them, is usually what retail traders want to do. But it's a futile thing. You get it right sometimes, but most of the time you'll get it wrong. The more important thing to understand is is that if there's a top coming, to notice that there may be one coming, and then to manage your position effectively. So, I speak publicly and quite loudly at times about, the dollar and whatnot's going on. But, over in Discord, we still trade up. Gosh, man, our members have made so much money with so many of the setups we've done, especially with stocks. But, we trade Forex, we trade stocks, we trade commodities, everything else in there. We're putting, these setups in there all the time. And, most of the setups are up. Most of the setups are longs. And so, we do that with the bigger picture in mind. It seems like most people get that these days. I've had a few clingers that can't get out of their own way. They just want to seem like they're superior and smart and whatnot. Had to get rid of one the other day. Had to block them. I just got tired of trying to correct them every time. But, it is what it is. Again, if you think you're getting into crypto or stocks or trading or whatever because you want to call tops and bottoms, I mean, good luck with that. I've been fortunate enough that we've done it really well over the past, years. But, you still get it wrong sometimes. Again, we got 2017 top, then we got the 5,200 drop, in crypto. And then once we dropped through 6,000, when we were down around that 3,200, we called that to be the bottom, the rise. We called the top there in June of 2019. And then again, the bottom there after it dropped there in March of last year with crypto. I mean, so we've done really good overall. It's just that at this particular point, what I'm thinking, what I'm talking about in terms of my bigger picture, my larger thesis, is this whole idea that we've got this very large cycle that we are topping out at, and it takes time for large cycles to top. And so, it can take longer. There is the thing, guys. If you want to know, there's that saying that some people kind of put up there every once in a while. The markets can stay irrational longer than you can stay liquid. And that's the idea. It takes a while. If you're talking about a 90-plus year cycle, which is what I'm looking at the moment, it's going to take, potentially a few years to top, to finish off, to get enough of the juice out of it, to get enough of the people, seeing that top may be in, to have it reverse. And so that's what we're still looking at. But it may have hit it now. If we jump here real quick, let me see here. I did mention last year, even when we were still looking for the tops, I said when the top is in with the equities, I said it'll be led by Tesla and the NASDAQ. I said, and the reason being that they were the ones pushing up so hard, so strong there as we finished up through last year. They were the ones that were outpacing all the other indexes and all the other stocks, right? So the idea is, and Tesla being so large and the NASDAQ being so tech heavy, that having that reversal of those two things is likely what's going to note, the top in there. And so still today, again, coming off what we've had as the top so far, that seems to be what's happening. Let me see here. Here's the NASDAQ on the 1 hour here. As you can see off this top here, we've got a strong move down. Potentially working on still a wave 5 here, or this actually might have completed wave 5 here. Of this 5, it might have been shorter here. But, again, with this big move down we've had off the top here, we're down on the NASDAQ here. And we're down about 12% already. And this is, we're talking about 5 waves down. This isn't even an ABC. This is 5 waves down. And as you can see here, a little bit of a move up. Look at how sharply, on the hour here, the Stochc RSI is moving up with that. We've got a bit of bullish divergence, it looks like, maybe building here. So again, this could be this, wave 1 of 3 here, finishing off, which just means wave 3 will head lower down. It'll overextend larger down. But, that means that this could move up here. Let's see here. That it could move, maybe up here around this block here, around this 12,900 kind of area. Again, you've got this large move down, move up, and then continuation down. So this would be a great target area. And 65% retracement kind of gets you right in the middle there. So if this is one finished up down here of 3, then we expect you to potentially head up there and then just continuation down. So by the end of the day, we could see it potentially hitting up there. And then next week, opening, continue the bloodbath, basically, as it continues down. Let me see here. Let me kind of catch up with you guys here. Darren says, I've done 500 setups since they've joined. When did you join, Darren? Yeah, Darren's my guy. He kind of pays attention to how much I'm doing here because I don't have a chance to. I just try to get it all out there. So, yeah, 500 setups, man. That's a lot. Jeez. Hop, you're very welcome. Sure thing, sure thing. Let me see here. Snack says, when it's risk off, are these larger players likely going to go to Tether? You know what? That's a good question. My initial thought usually on something like that is that they get out, that they go to USD. They exit completely to fiat. Because Tether, Tether still has its questionable issues at the moment right now. And depending on the kind of legalities of what they're in there. So if somebody is, say, investing in Bitcoin as part of their treasury or something for their company, there might be some legal obligation there that would find them in a lot of trouble potentially if they were to go into Tether and then something were to happen to Tether, knowing what we know right now with everything that's going on with that. Tether is still a very questionable thing. They've got a, there's so many lies and things were uncovered there during the NYAG, the New York Attorney General thing that really should make people still suspect and should be kind of concerned with what's going on with Tether. The fact that, we want to prove we have reserves. So the morning of, they moved, all that cash into that account. And then after they did, they moved the cash back out. Things like that are very questionable business practices. And with even what they have to do now with the agreement with the NYAG, I think it still leaves a lot of wiggle room for them to do some similar things. So I don't really think that it's still really all that safe to necessarily be in, especially if you've got large exposure. So yeah, I think if you've got some kind of legal duty because you're the officer in a company, I don't think going to Tether is the way to do it. I think you go to cash. You just go to fiat if you're going to get out. But that, again, that's my thought on that as far as all that goes, just because of what may be setting up with what they may, have going on, depending on all that. If they're an individual, they might stick it in Tether, maybe. I don't think many of the individuals, even the big money getting involved in Bitcoin, really knows. You guys probably know a lot more and understand a lot more about Bitcoin and cryptocurrencies than they do. If they understood what you do, they might not go into Tether. Again, we're talking about these huge sums of money, guys. But I think that they probably don't have the same degree of understanding of what's going on with Bitcoin and cryptocurrencies and how it all works and everything. They just see it as a vehicle to make some money. So, they might be willing to put it in there into Tether. But I think if you're a company and you've got hundreds of millions or maybe billions or something like that, I don't think I think putting it into Tether is questionable, I think. Let me see here. But that's a good question. That's a good question. I don't know for sure, but I think that's my thinking on it now that you've asked it. What's going on, Corey? Been thinking about your service. What's your average win rate and return over 2020 to 2021? I have no clue. Because we don't worry about that stuff. The biggest thing we do, guys, is about teaching you how to trade. You can talk to Denny or Darren there or LXT. If they think it's successful enough. I know our stocks have been just absolutely crazy, and we've had some amazing crypto setups. The biggest thing about that, here's what you have to understand. If I don't want you joining, guys, listen, I don't want you joining if all you're interested in doing is buying and selling, being told where to buy and sell. I really don't want you in our business, in what we're doing, because you miss the whole idea. What we do is to teach you to be a trader, which means to learn to understand who you are as a trader or investor. Because what happens is, if I say, listen, buy here, sell here, that's based on me. I'm in a different wealth, financial position. I have different goals than you guys are going to have. I have different time frames that I can trade and whatnot. So if I was to say something like that, the trade is good for me. Most likely not the best trade for y'all. And this is the thing that most people don't understand when they're looking for somebody to tell them to buy or sell. Because I am more risk adverse. So, you may make a few dollars with my trade, or hundreds of dollars or thousands of dollars, whatever. But it's possible that if you were maybe a more risk tolerant trader, or you have a different time frame, or you have different goals and whatnot going on, that you could have taken a different trade rather than that trade and made a lot more money. Again, what we do at TWC is real trading. We try to do what we can to teach you to be real traders. So the goal is to get you to understand how and why markets work the way they do. And then with our setups, what I do is I use those to show you how all these things that we're teaching you, how they work, in live in real markets, how you use them to develop where you may be headed with things. Again, if you're just, I just want to say that if you are just looking for somebody to give you buy and sell signals, I would suggest go somewhere else. Most people who do what I do are not going to tell you that. They just want your money. But, I think because of my honesty with that and, the approach that we take, I think that's why, we've got our members that stay with us for years. We've got members, I keep saying it, we've got members that have been around since we started in September of 2017, still today, still paying. And we've got on average, our members are over a year with us, on average. And so, and I think that's to say something about the way in which we approach it. Not to mention the trading community is probably one of the best you'll ever find. Such great people. But anyway, I just want to be honest with you about that. You probably would get, if you're looking for somebody else to give you buy-sell signals, you're probably better off going to somebody else. Let me see here. What's going on there, Blender? Do I mind showing the current macro account idea? Yeah, I don't know that I really got anything different to show than what I've talked about before. Let me kind of zoom out. I don't know if I've got one set up at the moment here. Let me kind of turn this off. Basically, you know what? This ain't going to work. We're going to have to get some as a larger time frame here from the beginning. All right. So this is the BLX. This gets you this is the, Bitcoin liquid index here. Comes from all the way back in the beginning. This is your other exchange charts, guys, are not going to get you. Even Bitstamp only goes back to 2011. This one gets you all the way back to 2010. All right. So my basic count says 1, 2, 3, 4, 5. Okay. So this gives us 1. Right now, I'm trying to see if this is a 1. If this is a 1, 2, a larger 1, 2. So this is all 1. And this is a 2. And then this is a 1, 2, and working on 3 here. That's what I'm trying to see right now. Because it's gone up quite high to be an A, B, and then a C as a flat. But we've never really had a market. I've never really looked at a market as a liquid as Bitcoin is. And we usually have these stronger moves. So I'm still kind of sitting there going, well, maybe this is going to be an ABC down, ABC up. So you get an A and a B. Or I'm sorry, not ABC, but yeah, ABC. And then you'll have 5 more down for C here to finish off 2 rather than 2 being finished right here. My biggest thing right now is that if this is 1 up, if this is 1, 2, 3, 4, 5 here, this is an awful short 2. Because this 2 here is about the same as this 2 here. Of wave 4 of the lesser degree. And it shouldn't be because this wave 1 is huge. So this wave 2 should take longer. So that's probably my biggest thing, guys. If you're wondering, why do I still kind of look at maybe as an A and a B and then a C as a flat here? Because the size, the time of this 2 here is so close to what you had over here. So if you look over here, that's 413 days. And then if you look over here, that's less days. That's 371 days. See, I don't know. How do you do that? How do you get less days in your wave 2 of a larger degree than your wave 4 of a lesser degree? This is wave 4 of 1. Why is this longer than wave 2 here of this large one? Or not wave 2 of 1, it's wave 2, the larger wave 2. It should be a larger time frame. I don't see anybody really talking about that though. But that is the one thing, if something were to keep me up at night, that would be what keeps me up at night. This potentially being a 2 here as an A, a B, and then a C out here, where all of a sudden now your length of time, is something like, I don't even know, 1,300 days, 1,350 days, something like that, or more, or longer. That makes a lot more sense to me as far as a wave 2 compared to your wave 2 and wave 4 here of wave 1. So hopefully that makes sense there. Let me see here. What's going on, Kenneth? He says, new to this channel, just came across it. Curious to know if you have any tips to knowing market better. I had no idea treasury yields can do that to the market. Thanks. Yeah, so, honestly, guys, you don't need to understand all the other macro stuff to trade effectively. As long as you can trade the chart, straight up the chart. But if you understand, I think it's more important right now with the idea that we're at the top of some kind of credit bubble and things are really wonky. Everything goes up all of a sudden. Stocks were going up, Bitcoin's going up, commodities going up, everything just going skyrocket. Ridiculous terms. We're hitting levels that are stretched beyond what we had in 2008, right before the great financial crisis, right before the 2001 dot-com bubble crash, right before 1987's Black Monday, right before, there in the 70s when we had it, right before even 1929 high before the Great Depression. The metrics that we watch are stretched razor thin further than all those times. And so I think with it being, the credit bubble, the everything bubble, I think that understanding more about the macro side of it really helps out a lot. And we talk about that, over at Texas West Capital. We've got a Discord channel just to have to do with macro finance and treasury, global finance, stuff like that, where I'm always adding, when I get a chance, adding links to help everybody understand better what may be going on, answering questions in there, stuff like that. But I think what you have to do is get off the mainstream sites that have to do with that. I think you need to look more at the contrarian ideas because the mainstream stuff is not working at the moment. They're all surprised. People expect, the whole idea of this bond rates popping up there or the, heading up there just seems to have taken people off guard, and it shouldn't have. It's something we've been talking about, for probably, 6 months now? 8 months maybe? coming up. And, I think you've really got to kind of look at that way. So I got lots of links that I put in that channel there. I think some of the better people, if you're on Twitter, Stephen Van Meter is a good one to follow. Santiago Fun is a good one to follow. Travis, Colorado Travis, is, he's the whatever over there president or whatever of Real Vision now. He has really done some great work lately. He's a bit more, at times, mathematical than most people may want to watch. But I think he has a lot of great ideas, a lot of great discussion about things that are going on with that. And then from there, you can usually get some idea of who else to follow off that. But I think those would be some great starter points if you're on Twitter to kind of get a constant dose of here's what's going on with treasuries and what it may mean. Here's what's going on with the bonds. Here's what's going on with the markets and whatnot. And, of course, me with that. Hey there, Shannon. You subbed? You came in? Glad to have you in. Let me see here. Let's see here. Mr. Who's the Gamer says, Money Flow Index plus alerts. Have I ever used that indicator? Is it any good? Money Flow Index is a good one. Money Flow Index is great. If you see price rising, but you see money flow dropping, that's a good indicator that, hey, you might want to be really protective of your capital at that point. If price is rising and money flow is rising, that's great. That means you've got more money coming into it, right? As it's continuing to rise. But if that price continues to rise with the money flow dropping off, that means you're getting less and less participation. And that's going to lead to a reversal usually. I don't know if the money flow index plus alerts works out very well. I don't tend to look at any of those indicators that have alerts on them because they're based on, whatever the person who coded it has it set in there for alerts. And I'll be honest, I just don't have the time to see if it works or not. I've gone my entire trading life over 25 years without using indicators with alerts on them. And I've done really well. So, it just get out of the I want to do it easiest and not really understand what I'm doing aspect and really try to understand the market, become a student of the market. I'm going to tell you, it's going to make it a lot easier for you eventually. At first, it's a lot of information, a lot of things. The biggest fight that new retail traders have is that what they think when they first come in is generally not the way it is. And it's the hard thing to get that out of your head, to go, oh, yeah, okay, I don't, these things aren't going this way because of this or whatever. But once you're open enough to really accepting that, to allow yourself to accept that, all of a sudden your eyes just get opened and you see, oh my gosh, yeah, if it's doing that, then that makes sense. And it's opposite of what you thought as you came in. So, yeah. Let me see here. Let me see here. Mike says he was on the Discord like 2 years ago. It was really good then. Man, Mike, we've added so much more to it nowadays. Yeah. Just keep following along, Mike, and look for, if you ever get a chance to jump in. I definitely understand being a student. But, we do have specials every once in a while. But you got to keep following us, so that way you know when they're there. Let me see here. Let me just kind of catch up with you guys here. Jake in Place has joined a year ago. Chris is super genuine. It's an amazing place to learn to trade. Needle in a haystack. Count yourself lucky to have found TWC. Hey, I appreciate that, man. I appreciate that. I always love reading, stuff like that. It's nice. It means, at the end of the day, guys, I don't have to do what we do at TWC. Those of you that may not know our story, I started it while I was finishing out law school because just the nonsense that was all over crypto Twitter, everybody joining pump and dumps and all the really bad analysis without any real thought in them, without any real understanding what was going on. That's why I started it. I didn't have to. I chose to do it. And hopefully just to help people, really understand, to combat that. And it's growing into what it is today. And I really love doing it. It's a lot of hours, but I really enjoy it a lot. But again, if it gets to the point where people in general aren't learning anything from us, there's no reason for me to keep it in anymore. And I won't. But as long as y'all are still learning and still appreciating it and whatnot, then yeah, we'll stay in business with it. Sure. Let me catch up with you guys here. Gold price up and down, please reply. What is it you would like me to reply? Gold's going down. I think it's going down. My target still overall stands at, that $800 to $1,000 area there. That's the same one I've had for years now. I think we're still headed there. Of course, with the idea that we were headed up first. It went a little bit higher than I thought it was going to, but nonetheless, the flat idea is still in play with that. Silver, I still see going down below $8. So, yeah. Do I offer any sneak peek offers on the service, like a 1 or 2 week deal? No, we don't at the moment. Watch next week. I think we've got something that people might enjoy. So be sure you're following me next week on Twitter, or you're on the free side of Discord or something like that. We're going to announce something next week that might tickle your funny bone there with that kind of idea. Hey there, Baker. Always good to see you checking in, man. Let's see here. Esteban wants to know my opinion on XDC USDT. Let's see. I don't have that at the moment, but let me see if I can find it here. Let's see here. There we go. I got to think here. USDT. Let's see what we've got here. Whoops. Okay, go back there. Hit the wrong button. CUSDT. Did I get that wrong? Is it XDCUSDT? Because I'm not getting it pulled up here on what's it called here? TradingView, so I can't really take a look at it if it is. Let's see here. Oscar, what's going on, man? Let's see here. He says, open up the MicroStrategy chart. Yeah, we've looked at that a few times before. Whoops. Yep, down there 608 now. We've actually been as low as 537 after being as high as 1315. So, half over a 50% drop there. Yeah, I mean, again, coming off there, not a good look. Right here on the weekly, we're nearing overbought on Stochc RSI. Got a lot further we can fall potentially here on RSI. Working into the daily here, we've got room to still fall. Let's see here. This looks like it may just be the wave A down, maybe. Looks like we've got a 1, 2, and then a 1, 2, 3, 4, 5 gives us a 3 and a 4, and then 1, 2. That might be a 3, 4, and a 5 here. This might be a fifth wave coming down here, which would be an A. You have a B up, and then you have 5 more down for C potentially. Just a quick look at that real quick. But the 4 hour here hasn't dipped down into overbought. I mean, look at this. It's dropped from way up here. Over 50%, and the 4 hour still has not hit overbought or oversold here on RSI. That's significant. That means you've got heavy selling and not a whole lot of heavy buying going on with that. Does that volume look like there? Yeah. Yeah. Sucks to be Sailor at the moment, that's for sure. At least in terms of MicroStrategy there. What's my opinion about the XRP token? You mean, is it a scam, or is it worth doing, or whatever? You make money on it. I've been talking, I've talked a long time about it. a lot of crypto Twitter and even things like Coinbase and whatever are concerned that XRP might be considered a security, blah, blah, blah. But my thought is it's so widely held right now that they're not, that I think the worst that may happen, I don't think they're going to be like totally told, listen, go out of business or whatever, get rid of XRP. I think they'll get fined is what I think it'll be. Because they'll look at it as, okay, well, if we totally cut them off, then that's going to have the potential to hurt a lot of people. All of a sudden, it becomes worthless. And everybody out there holding, especially your average Jane and Joe, are going to end up with nothing. Potentially dumping a whole lot of money into it. Now they have nothing. So I think, my thesis, my running idea all this time has been that I think they're just going to end up getting slapped on the wrist or something. Some kind of fine. I mean, and it might be a big fine, but it'll be a fine nonetheless. I don't think that they're going to completely get rid of, XRP as a token there. But, you still want to be careful trading it because if the market sentiment is enough, it can be enough to potentially give it a lot of trouble, as far as your charts go. But I don't see a reason yet. They haven't been to court. They haven't been found guilty of whatever it is that they're looking to do. So, they could even just get through that, and it may end up that, they're not in violation. It's not a security. The judge might rule that. So, everybody's kind of making these assumptions before it happens. But if you're interested in holding or whatever, you have to take this into consideration, because if the market in general is feeling negative toward it, then it could, push that price continually lower there for a bit. Spiral Architect says, first big lesson for me was you don't know what you don't know. And that's the biggest that's one of the biggest things as a new trader, guys. You think you know something, but again, as far as the markets go, but you're brand new to it. You don't really have any education or experience in it. So it really is serious. You don't know what you don't know. You think something is correct the way you're thinking about it because it looks to be playing out that way. But you don't know what you don't know. You don't know that you're potentially quite wrong in what you're looking at with it. And so the goal as a trader is to be on the right side, to understand. Which doesn't mean you're always going to be right as a trader. You're going to be wrong more often than you'll be right. That's why risk management is so important. We're human beings, guys. We can't possibly know the outcome of every outcome of every outcome of every outcome. The whole decision tree. We can't know 5 billion outcomes ahead from the one decision we make now. You think about the butterfly effect, right? So you have to protect yourself. But even when you do know something, you still have to use your risk management. It doesn't mean that you're going to come out with the correct reading of the market at that time. Yeah. Let's see here. Hey there, Farm D. What's up, man? ATMD there. Why is the dollar rising? Because everybody's been so bearish on it for so long. No, really. It's usually when you're that off sides on something in the market. The market usually doesn't. The market usually punishes you for being off sides. So what we mean by off sides is a lot more people being, either long or short on that. And so, really the dollar is just bouncing off this structure here. And if we keep on zooming out here, let me see if I can find this here. There we go. See the structure up here, resistance, pops on through, support, comes back down, support, bouncing off that. I mean, my count at least has it working on, potentially a wave 5 here working up. So as you can see it right here. As far as the daily goes, I mean, if you look at the daily, most recently here, we bounced off the S1 pivot area here, shot up through the pivot. I mean, if you're trading pivots, this right here, you pulled up above the pivot, pulled back, bounced off the pivot, continue up. If I see this on any chart, I'm generally thinking we're running pivots. Get up there. But, it's just that, why is the dollar go up there? Because people want the dollar versus other currencies. Remember, your DXY value that you get here is just it's a weighted basket. So your Euro USD value makes up 57 or so percent of it. Your USD Yen value makes up about 11% of it. Your USD Swiss franc value makes up 4.3 or 4.5% of it. So you've got multiple currencies in there, and their weightedness in there gives you the value. So if you wonder why the dollar's doing well, you can just look at it versus really against the Euro USD more than anything else, but also against the the USD Yen. It basically seems to be in third waves. The dollar's in a third wave advance against the euro, third wave advance against the yen, third wave advance against the Swissy, third wave advance against the Great British Pound, the cable there. I think it's potentially in a third wave advance against the Canadian dollar, the loonie. And so, it's just a comparison of what's going on in the U.S. versus what's going on in all these other countries. All everybody talks about is, how much the U.S. is printing and all this other stuff. But again, QE is not just dollars printing and flying around in the economy. If it were, then you might have a point, but it's not. So it's basically a balance, ledger movement is really what it is. Let me see here. Let me kind of catch up with you guys here. Farm D was, do you think there is utility in charting the following? I can't even read this. My eyes are so bad these days. If I understand correctly, this is just the average of the NASDAQ, the S&P futures, and the Dow. No, I wouldn't really. I don't know that I'd really do that. I've never done anything like that. I don't know that there'd really be any utility in doing it. Remember, your NASDAQ is really tech heavy. Your S&P is decently tech heavy, and your Dow Jones is much more broader based index. And of course you got your Russell out there and a few others. I don't know that I see a utility in averaging those out and running with that. I think right now we look really keep a strong eye, I think, on the NASDAQ. That's the leader here. That was the one continuing to push higher and harder than everything else. It's the one that's coming back, it's getting rejected stronger. Watch Tesla, because it's such a large part of, again, the S&P there. Is the S&P? Yeah, I think so. So, you watch, I think if you watch that, I think that'll give you really what you need to see versus anything else. The only other thing to that is you just want to see that, say, the NASDAQ, the S&P, and the Dow Jones are all headed down. If they're all going down together, that's a pretty good sign that, it's headed down there. Can you discuss good screeners, both free and paid? If you pay attention to macro, use your service education, where's a good place to spot good specific setups? Well, we've got great setups. Don't get me wrong. We do provide setups. As Darren was saying, I've provided 500 of them or so since he joined. I think that was in the last year. Sometime this last year he joined. We've got great setups. I don't know that I know of any service in particular that I would just say, yeah, you need to go over there and do setups. The only other service I generally push for people is EWI, Elliott Wave International. Well, that and Wyckoff Analytics, which is a Wyckoff. These two things to make up the basis of everything I do. Because they're all about understanding how the market kind of works, everything. But the Wyckoff Analytics, you're not really going to get the setup the way you're looking for, I don't think. Elliott Wave International may give you that. Go to my profile on what's it called there, Twitter. There's a link in there where they're doing a special thing at the moment here for the next day or two here that you can jump in on. Just go to my at TX West Capital on Twitter, and then follow that link, and you can jump in there and see what they're about and whatnot. But they're the only other ones I really kind of push. They have like setups I would trust more than not. But yeah, we have a lot of again, a lot of setups that we do as well across all the markets. We do oil updates twice daily. Natural gas. We do silver and gold. We do crypto indexes, of course. A whole bunch of cryptos here that we track every day, as well as some Forex pairs that we track every day. The Aussie against the USD, the Euro against the USD, USD against the Loonie, USD against the Yen. Like I said, gold and silver on there as well. And we've had a few suggestions lately. I think we may be adding ADA and maybe DOT into our daily analysis maybe. So we're going to look at that as well. So yeah. Let me kind of catch up with here. Mike says, I remember you told us back in the day you bought XRP at a little less than a cent and sold like at around $3. Yeah, that was by far my best trade. That was when I first entered crypto. I entered crypto in January of 2017. First thing I bought was Bitcoin at around 1,100 and some change. Second thing I bought was Ethereum around $15.61 was what that was. I bought Litecoin at $2.71 or $2.79. And then I bought XRP at 66/100ths of a cent is what it was. And then we sold that at between, I don't remember what the average price it was. It was between $2.50 and $3. We didn't sell at the very top, $3.25 or whatever. I think I sold most of it around that $2.60 mark, right around there. But yeah, great trade. But that's the exception to the rule, guys. As a trader, if you do trading right, you'll get those as you do it. But if that's what you're looking for every time, you'll often end up losing money because you won't have the patience. Again, I had to buy that back there at I think we bought it in March, and I held it until December. Again, VET was another good one, or not VET, XVG. Yeah, XVG. That's the one we bought at 7 and 10 sats there in May. And then it popped up to like 240 something sats in June. And I just held. And then it dropped back to around 52 or 55 sats there right about the beginning of December. And I put up a setup for our members there saying, it was a good buy there. And so we loaded up some more there. And then within 2 weeks, I think it popped up over 2,000. That one I really sold early. I sold that one at around 1,800 sats, and I think it went up to something like 2,400 or 2,600 sats maybe, something like that. So, we've had good trades, and we had good times with all that. But, again, it's the day in and day out trading, if you want to be a trader, that you should be working on being consistent with. Just trying to catch up with you guys here. What do I think about a WXY at Bitcoin from the top to our low? So let me get right over here. Back to Bitcoin here. Where's my Bitcoin chart? Oh, it's over here. That's right. I think we got it on this one. All right. You mean a WXY here? It's possible. It's possible, but the big problem with this being a WXY is this is an ABC right here. Or even this is 1, 2, 3, 4, 5. There's A, ABC, there's B. And if I look at this, I think this is a 1, 2, 3, 4, and then 1, 2, 3, 4, 5. So 5, 3, 5, and we've dropped back below that swing low there. So that screams to me this is an ABC. And if this is an ABC, then this is likely headed lower. And if this is likely headed lower, then this is 5 down, as my count originally gave us on that. Remember, I had that, I zoomed into like, I don't know, the 15-minute or something and counted all this down here, and this was, five waves down. But, no guarantees on that count, but, it does seem like this is 5 down, this is 3 up. Now, the other possibility, again, as I said at the beginning, is this could be, again, thinking in terms of a WXY, excuse me, this could be a WXY and then an ABC. Sorry, guys, give me a minute. Dry throat here. And so we may be seeing a bit of a triangle printing here. So A, B, and if this is an ABC, then C here, then we'd have an ABC, and then, D, and then E finishing here. So I think I don't know. I have a harder time getting an ABC out of this, but maybe. And if it is, again, you'd have, this A, B, maybe something like this. Maybe is a C, then maybe a D. And I would think that the E then would probably end, would probably end right around this this 1 hour, 4 hour pivot here. And then, of course, it would take off there. Excuse me. Yeah, and so that kind of gives you this triangle here. I'm not a big fan of this triangle hanging so low, though. But, it's a possibility. Something like this. And if it is, and E ends up around that pivot there, then, you're going to have a pattern target of the height here of about $15,425 above where Wave E terminates. So again, if it terminates on the pivot there, that would give you this pattern target up here of around 64,100 or so. And if this is a triangle, then that should be where you're generally going to expect price to hit. But if it continues down here, continues where it's at, lower, below this swing low here, then, this is going to be at least a zigzag heading down. So, we might see something along the lines of this maybe print out here. But this is, this is definitely pretty clear 3 up here. So, yeah. Let's see here. Oh, my gosh. Is that Arda? Says, it requires a correction, sir. You are selling dreams right now. Anybody that's been seeing me more than once knows why I'm laughing with that. I'm known as one of the biggest bears on crypto Twitter. And not because I'm really a bear. I'm actually one of the biggest bulls out there. But overall, a lot of things are toppy-ish right now. So we'll continue to see how this plays out. I don't really think that we're doing a triangle at the moment. So I'm still looking for further downside here. Right now, we're going to stick with potentially an ABC as a 4 before a 5 up. But, again, this could very well be a 1-2 here. And we could have much further downside. Yeah, go ahead and Arda, or Ardia. I can't say. I think it's Arda. Be sure to watch this video from the beginning. Watch this stream from the beginning. You'll change what you're saying there if you do. Excuse me. BlockTech, what's up, man? He says paid network is getting exploited now, guys. Price is tanking. Oh, okay. Just talking about that. Okay, I see what you're talking about. What's going on, Tell You Ryder? Good to see you, bud. Darren's asking, in your personal investing, how do you juxtapose the months you held an asset like XRP or Bitcoin versus taking profit when you see it? How do you juxtapose those? Usually, it's based on where I'm entering. So, like when I entered XRP, it was already quite low. To me, it seemed, it looked like it was a bottom. And so I was interested in holding that for an extended period of time. At the beginning of 2017, I had just joined, the first Q1 there, Q2. I just joined crypto, and I wasn't sure how things worked in crypto. I'm coming from legacy markets and, most recently Forex. So I was not expecting, again, that run up there in Q4 at all. But what I can tell you is when we started our service back in September of, I think it was right around September 9th or 11th of 2017. Scott Melker was one of the very first people to jump in with us at that point, to join us. And that's how I got to meet him and know him. But I remember talking about, we were trying to get a handle on what was going on with Bitcoin around the end of August, the beginning of October. And I remember telling our members that it seemed weird. It didn't seem like, it wasn't moving like we would normally expect it to. And sure enough, that was about the time it started heading up and taking off there as it entered Q4 to do all that. I do remember that. That was kind of crazy times. But, yeah, it just depends on, right now, I wouldn't, Me personally, I'm not buying anything right now that I plan on holding any significant length of time because of my greater macro view and what's going on there. So anything I'm buying right now are usually shorter term trades, whether it's shorting them or buying them or whatever. But usually when I do, it's because, things appear to be bottomish, or at least bottomish enough, as far as a decent, larger wave pullback or something for like a wave 2 or something like that. Oh my gosh. Can I tell you how to buy crypto coins? It depends on where you are, sure. Everybody hates Coinbase, but I'll tell you what, right now, there's a reason they've grown as big as they have. So Coinbase is one. And the good thing about Coinbase is, they're a registered money services business here in the U.S. So, everybody wants to accuse them of doing things, but the reality of it is they're really not going to do the things that many people accuse them of, because if they do, that could put them in a whole load of trouble with those licenses they have and put them out of business. That would be a good one. Kraken, if you're going in through Kraken. Femix, they have a buy there. I think you guys, if you're foreign, if you're not a U.S. citizen, you can get in, and you're not in one of the countries that they don't allow. Binance has a direct buy as well now. Yeah. Oh, okay. Yeah. You're in India. Yeah, I don't know about anything in India particularly, specifically there in India. But, Binance probably, I think, would be the one maybe that might reach y'all out there. And they're pretty significant. They're pretty large. So they might be a good one to try and get in through. Excuse me. So you do not hold any Bitcoin long term? Oh, no, Corey. I'm sorry. I do, from back in 2017. From January of 2017 when I first got in. Yeah. Yeah, I've still got holdings from there as far as, Bitcoin and Ethereum go. Yeah. But I wouldn't buy right now with the intent that I'm going to hold for a few years right now. And I could be wrong on what's going on with the market, and it's not going to be a big deal for me if I am. But there's too many things going on right now that make me concerned about the, how long this might continue higher now. Again, a lot of the signals we're getting, laser eyes all over crypto Twitter, all that stuff, calls for $1 million by next, by Q1 or Q2 of 2022, $1 million by the end of the year. I'm hearing all these things constantly, and these are the same things if you were around in 2017, you would have heard back then. And these are usually indicative of a top of some sort. And so, again, and you've got all the celebrities getting involved now. Paris Hilton and pseudo celebrities like whatever her name is with Joe Exotic. The one who, they say may have killed her husband or whatever. I don't know. But, she was on TikTok pushing Dogecoin, Doge. She called it Dogecoin, though. But, so you're getting this, and a lot of Soulja Boy, I guess, is kind of making waves in crypto Twitter. You've got all these things kind of happening. This is usually more of a topish signal. So I have no reason to really kind of buy into that at the moment, myself, personally. Yeah. So that's what that would be what I'd be holding there. But, it's back from those earlier days of buying there. Things that I intended to hold for years. So, yeah. Let me see here. Speaking of strategies for protecting capital during deep retraces, what do you suggest for protecting Bitcoin when stablecoins are potentially suspect? Man, you're kind of... I think, if you want to put it into a stablecoin that has more of a chance... God. What you want from a stablecoin is you want them to be open. You want to have, what's the term? transparency. And, you just don't have that. They haven't even tried to have it with Tether. And we know why now. We know why, because they were commingling funds and between Tether and Bitfinex and all this kind of stuff. And may have been doing God knows what. We don't know, right? And so, if you're serious about protecting your money, that becomes, something that you've got to really kind of pay attention to. Now, you can do USDC, which is, the stablecoin over here in the U.S., fully transparent, but you got to do KML, or KYC and AML stuff to get it. And it's potentially subject to government doing something. So there's a trade-off. I think, I'll continue to say it. I think if you're in crypto at all, it's all very risky to be in crypto. Whether you're in a stable coin or not, or whether there's so many things that, so many moving parts that could have some kind of impact on it. I don't know that there's really anything you can seriously do to protect it, in there. It's like saying, the big mantra for stocks has been this idea that, you need to diversify into different sectors. So you got some mining stocks, you got some healthcare, you've got some, consumer staples, you've got energy, and the idea is overall the profile kind of rises, right? Your portfolio kind of rises. The problem is when the market itself just tanks, everything goes down, right? At least for a while at first. And I think that's kind of the same thing, but more so with crypto, because everything's kind of relying on Bitcoin. Now, there are a few outliers. During 2018, Binance Coin was, went up and went out. That we missed that one. I'm going to be honest with you guys. I didn't get in that. And that went up and did, really well throughout 2018 going into 2019. During 2019, I think that was when Link came out, right? And so other things being down, and Link still went up. So you're always going to have something out there that'll usually buck the trend. But it's often really difficult to figure out what it is. So to say, you take all your Bitcoin profits and you put it in whatever's the next BNB or Link, I think you really kind of, again, take a lot more risk in that, if that was something you were to do. Let's see, Arda is mentioning DAI. Yeah, DAI is another stable coin there. It says it's a substitute of USDT, and I personally think that DAI is more reliable in terms of decentralization. That's what Arda's saying. Yeah, but I think, here's the one thing about decentralization, guys, that nothing is truly decentralized out there in the view of government, okay? For instance, the U.S. government, y'all are like, oh, let's use DEX exchanges and, they can't be touched, blah, blah, blah. Well, sure they can. The government will go after the creators of the DEX. And the government may be able to find that they are liable. And if they find that they're liable, those people who created it have a lot of incentive to shut it down. Same thing with, with potentially decentralized coins, of any kind. So you guys always have to keep that in your mind. Don't think that just because something's, decentralized, the government can't do something with it. Government's all about control and power, guys. And they, they're going to use it to use it. And so, they will find ways to potentially put ownership on it. The idea is, and from their view, it makes a lot of sense. The idea is, well, nothing, it didn't just come out of nowhere. It's decentralized, sure, but somebody had to create it. So the person that created is responsible for it. And human beings, guys, let's face it, human beings, what do? We try to minimize pain, right? That's the biggest thing that humans do. You got greed and fear is the larger of the two drivers, because fear equals pain. So mitigating pain is the largest thing, that is the largest emotional response that humans have. Let me see here. So yeah, that's what I would look at. And you know what? if the dollar's rising and Bitcoin and others dropping, I mean, you know, you take your profits out of Bitcoin, you put them in the dollar. You know, take hold of that appreciation as deflation kicks in. It won't be around forever. It'll be around for a bit, though. Might be the way to do it. Mike says, I'm waiting for the stock market crash and then invest again like I did in 2008. Yeah, the only thing is I think you're going to be a much larger, you know, again, my whole idea here is we're going to have something much, much more significant, potentially along the lines of the stock market crash back there in the 30s, the Great Depression crash. Because, again, we're talking about if what I'm thinking is right, then we're talking about being at the top of the everything bubble, of the credit bubble. That thing pops. You know, all this, I've shown charts here, especially of the expansion of credit since the 70s, since we got off the gold standard. And that's how it's just accelerated here over the last, 20 years. It's pulled so far away from that mean there. It's got to, you think it's got to come back. And it's going to be a significant move back if that's the case. So we'll see. Surely that depends on which jurisdiction the DeFi exchange is operating out of, Leighton. I think you're talking about what I was saying about decentralization. If you're talking about the decentralization exchange, no, it's not going to matter what jurisdiction it operates out of. If the person who created it is a U.S. citizen, they are bound by the laws of the U.S. Or if the DEX has U.S. citizens using it, then you backtrack that into, okay, just like any other company, if you're doing business with U.S. citizens, you're subject to U.S. law. Not just the laws of your country, you're subject to U.S. laws. And so the creator of the DEX then, you circumvent it, would come around to potentially be held liable. Sure. Do I have a time frame? I see what the big thing happening. I really don't. My best guess would be this year's. As a matter of fact, I mean, right now it seems like it may be the beginning of it right now. This right here. It seems like it may be the beginning here. Look at how huge. Look at these large bars on the decline here. Large significant bars. We're below the daily pivot here. We're below the, we dip below the S1 pivot. Look at that weekly. Huge bit of drop here. Now, my only concern here is you do have this big gap here. So I can see maybe like a wave 2 pulling up to fill in that gap. And then continuing down. But if you lose that weekly pivot, I think that kind of just says, oh, that's it. I think it says, there we go. For right now, we're still trying to find some support right around this previous area of support here. And so, it could just be a pullback before, further upside. But I mean, if I'm looking at this here, I'm going, 1, 2, 3, 4, 5. This becomes potentially, a 1, 2, 3, 4, 5. And you just kind of keep backing out of it like that along here. 1, 2, 3, 4, 5. And then so 1, 2, 1, 2, 3, 4, and then 5 out there. So we keep doing that, just to keep backing it out of that. But I think it's making a good case at the moment. Again, you notice this large bearish divergence here that's been here with RSI on the weekly since back here in, early January of 2020. So yeah, again, I think it's very, and especially if the dollar has broken, especially if the dollar's bottomed here, which it looks to have done. And this is heading up. This is a reversal of dollar heading up here. This dollar moving up like this is deflationary. Deflation, rising dollar means stocks and everything should be dropping. So, especially if that's the dollar bottom there popping up, then yeah, it should be. Let's see here. It isn't that simple, though, as citizens with the use of VPNs are becoming decentralized themselves. Oh, nobody said it was simple. I just said that that's the likely what would happen. But yeah, I mean, there's a lot more, guys. You don't understand. Government's a lot stronger than I think most of you guys really understand. And especially the U.S. government, but other governments as well. Remember, they're the ultimate arbiters of power. So they can be as strong as they want. And when it comes to the U.S., all you have to look is the international financial, out there, and how it puts pressure on the other countries to do things that the U.S. wants done when it comes, especially in terms of crypto and decentralization and all this. The U.S. wields a lot of power, guys, because of their economic and military might. And so other countries which don't have the same economic might or the same military might are going to, agree to do things that the U.S. wants them to do. So don't think just because you're in some other country that you're protected. Nah, most of these countries are going to go ahead and give in to the U.S. I'm not sitting here saying because I'm in the U.S. it's a great thing or anything. I'm just saying this is the reality, guys. So yeah. Squam, sure, good to see you. Yeah, and like Telluride says, they don't even need to shut down Bitcoin. They just need to punish traders with taxes and investigation. Prices will crash. Yeah, and again, it's not going to be simple. The way the government's going to go about it isn't going to be, they're going to track down all the users individually and surveil all them, millions and tens of millions of people, whatever. No, all they have to do is work, all they have to do is get the on-ramps and off-ramps. So Coinbase and whatnot, they just got to get them to do it. They can get them to police you. Like they get banks to police you. Remember, here in the U.S., if you want to deposit or withdraw more than $9,999, more than that, then by law, banks are required to let the government know. And they are strongly encouraged to let them know if it's anything over $5,000. So your banks become the eyes and ears of the government. Government doesn't have to watch everybody individually. They just have to get the on and off ramps when it comes to crypto. Coinbase, Binance, Kraken, whatever they want out there. So yeah. What if the UK announces the regulations before any government? What regulations? Yeah, like we were talking about bonds earlier. Bonds should have higher to go. So, it surprises everybody right now that are looking at the mathematical side of it, but they shouldn't be, I don't think. Let me see here. Yes, the 90-year grand super cycle thing would be a multi-year time frame of decline. Yeah, it should be. I mean, we don't know for sure, but yeah, it should be. It should take a few years to kind of find a bottom, and then it'll take even more years to get back up to where it is right now, way up here. How do I hedge against it? I don't know that I really hedge against it. I just trade. If there's wealth that you want to keep, you look at investment grade treasuries usually. Is the way to kind of hedge against it. But for me, there's still going to be stocks to buy. You can still short precious metals. You can still short Bitcoin if Bitcoin's going to go, down. God, I'm about to be done here. I can't even talk. So yeah, I think if you're going to do it, I think you look at things like investment grade securities. So treasury bills, stuff like that. Or whatever you can put long the dollar, you can do that. If you can go to the CBOT there and trade dollar futures, you can get long that. Or you can just buy dollars. Or, of course, you can long the dollar against anything else, euro, yen, whatever. Yeah. Decentralized governing, yeah, that's never going to happen. And guys, I know, I've talked about this a long time. I got to get out of here, but the big thing I used to hear a lot back in 2017 was how Bitcoin was going to unseat centralized power, and it's not going to. Humans have a history, thousands of years of desiring to be controlled, of believing in false securities perpetuated by their governments. human beings want that false sense of safety. They don't want to be their own guard. They don't want to be their own bank. And these are the things, these are the reasons that people say why Bitcoin's going to succeed, because people want these things, but people don't. A few of us want these things. I want these things. But most people don't, guys. Most people are just trying to live their life oblivious to any of the bigger concerns. They don't want to have to think about it. And that's why governments continue to exist, because people in general don't want to deal with it day to day. So, I don't believe, historically there's any precedent for Bitcoin being some great equalizer, giving the little guy all this extra power, all the big guys going to lose their power. I don't see that. It's a nice thought. I don't see it. Excuse me. Is there any chance of Bitcoin uncoupling from the stock market going on its own way? There's always a chance. I don't think it's very likely, though. And I don't think it's coupled with the stock market. I think it's just a risk-on asset. And when risk-off hits, which is when stock market, everything else goes down, Bitcoin goes down with it. And that happens usually, specifically when the dollar rises. So, yeah, I don't think that they're necessarily coupled or whatever. I think they're correlated to the extent that they move the same way with the dollar movement, opposite of that. God, I'm so sorry, guys. I had to get out of here. My throat is so dry, it's killing me here. Leighton says, if anything, this whole pandemic has shown how people desire to be controlled. Yeah, exactly. And it is what it is, I'm not one of those. I don't desire it. I would much rather, have control over everything that has to do with me. But, maybe some of y'all as well, but most people aren't like that. And we have to be careful when we get excited about something like Bitcoin for these reasons, thinking that it's going to extend to everybody else, because most likely it's not. So anyway, guys, I'm going to get out of here. I'm sorry. I'm having too much here, and it's 1 o'clock already anyway. We'd love to have you join us, guys, over here at howtotradetowin.com. Come see us. Jeez, oh whiz. If there's one thing I can promise you is the amount of content, you will not be in any way, I can't imagine there's any way that you could be in any way let down by the amount of content. We produce more content in a month than pretty much anybody can go through via our education, our setups, everything else we do. So tons of content coming out daily all throughout the month. We'd love to have you there. But if not, we will see y'all on, next Tuesday, right? Tuesday at 11 a.m. Central Standard Time. And we'll get to talking about all this again. Right now, though, I think we may be seeing the cracks happening and the top may be in. We'll see for the stock market. Gold and silver, again, guys, I'm still looking, I said 800 to 1,000. It's really kind of like around that $900 area for gold. Probably $6 to $8 for silver. Bitcoin, Bitcoin's the iffy one right now. It could be topped. I don't think it necessarily is at the moment. I'm leaning toward giving the bulls another chance to push one more time up. And at that point, we could see a huge move up as a final thrust up there because of the illiquidity of the market of Bitcoin. But you need to be careful right now with watching what's going on with Bitcoin because, there is also the very real possibility that we could be seeing it heading down to 20 and lower. Just as if this is a more significant top, just to get that larger pullback from March or something like that. So I think, copper, lumber, all that stuff, I think, again, we saw all this. I think it was 2008 it was happening at the top of the market right before everything kind of crashed down. I think we're seeing the same thing right now. Just this overexuberance, everything going up and then kind of coming back down. So there we go, guys. I'm going to get out of here. You guys have a great interest, great weekend. Trade safe. And remember, the only thing you control in the market is how much you lose. So we talk about all the targets and all this stuff all the time, but at the end of the day, your risk management is actually where you're going to make your money. So do me a favor and spend most of your time working on that, all right? You guys have a great weekend, and we'll see y'all next week. Take care.